It has been an absolutely roller coaster of a week, and I thought, why not look at some of the most tracked and most important charts in the world right now? How are things set up globally, right? Now, the first chart that I'm going to talk about is the S&P 500 E-mini futures. The chart itself is a weekly chart, weekly data points, and this is perhaps the most traded equity futures index in the world, right? As you can see, I'm not sure if you can see very clearly, but I think you can make out there is a triple negative weekly divergence which is formed, over the last couple of weeks now. And that suggests that there is downside. Where do supports come in? I've drawn a line on the lower end, that is the lows in March. That stood at about 37.20. From where the S&P 500 futures are right now, that's about 5% away. If that gives away the 37.20 mark, which is about 5% from where we are, then we'll have to project lower. So that's the US, the most actively tracked US equity index. Let's come to oil now, right? Again, a big marker of this entire global reflation trade. Brent oil futures in focus. Again, we are looking at weekly prices, weekly chart. And the last price point that you see is as of the end of last week. That is February 19th. But it's okay because between the 19th of Feb and where Brent future prices are right now, they've not really moved around that much. There's about $1 odd difference which we have seen. So crude oil prices, as you can see, have seen a nice pullback so far. They've already come off quite a bit. Now, if you go back in time, does the setup that we have right now look similar to September 2019 and Jan 2020? Do the setups look similar currently in that sense? I think yes. Back then, in both these instances, September of 2019 and then Jan of 2020, prices bounced off from the 56 odd levels. This is the level I'm talking about. In both these instances, prices bounced off this level. Let's see if prices get to 56 and if 56 actually holds as well. Let's move on to industrial commodities. Copper prices is what I'm talking about, and they've pulled back strongly once again. This here is the daily chart that we're looking at. This has been the cheerleader for industrial metal prices all along the so-called reflation trade. Strong supports at $3.80, $3.88, as you can see. That's the channel, and the straight line, the horizontal line that I've drawn is where the supports line at right now. Let's see if it holds or not. Now, let's move on. From the rates market, what I'm looking at is the 30-year US bond yield. This is the weekly chart that I'm looking at, and the whole up move in the entire rates complex in the US first showed up in the 30-year. And that's why this is important. This is a weekly chart here. I would like to have some sort of illustration here, but there is an evening star pattern suggesting that a top may be in place for now. Basically, there is a pullback. Now, yields going down is positive, but the fact is that yields now are starting to head lower because there are growth worries, which isn't exactly good. I want to finish this off with a gold price chart. Again, I'm sort of referring to a weekly chart, which will come up on your screens. There you go. I put the focus on this the first time on the 25th of Feb. The price back then was closer to $1,800 an ounce. And I'd highlighted that things were looking a little weak. Prices have pulled back since then. And as you can see from the chart here, there could be more trouble if the 1670 to 1676 zone sort of starts to give way. To conclude, I would say from across asset classes, equities to oil to industrial commodities to rates to precious metals, gold, and even for that matter silver, things are looking a bit tricky and perhaps not all that strong, as strong as you would want them to be.